Hey, what's going on, guys? Omar here, broker and CEO of Alden Mortgage and OMA Realty. So we're gonna have a mortgage rate update. See what the rates are as of 8/5/2022. Hyundai's in some big trouble because they're reporting stuff that's false. On your credit report, if you went and bought and leased on a car, they got fined and they had to pay back $19 million because what they were doing is they were going ahead and falsifying their credit reports and then putting delinquencies on people's credit reports. So we're gonna go ahead and talk about, let's see exactly what they did, and then we'll talk about if the repercussions for falsifying documents on a credit report is the fine. Is in relation to the fine that they got, is it really the amount that they should have paid, or should they got a little bit worse? And then also the companies and jobs that are going to take a big hit. We're going to talk about some numbers. Amazon's another big one, on how many people that they let go. But let's go ahead and get on with the mortgage rate update. As of right now, 8/5/2022, 30-year fix will be sitting at 4.89%. 15-year fix will be sitting at 3.73%. 30-year high balance will be sitting at 4.62%. DSCR will be sitting at 8.50%. DSCR is a debt service covered ratio loan. This is a loan product that is basically for people who want to go and get into the rental side of things, where we don't calculate anything based off your W-2s or your taxes or anything like that. We just go based off of how much rental income is coming in versus how much debt you have going out. Bank statement loan is another qualified non-agency program. This is where you don't have any bank statements, you don't have any W-2s, you don't have anything that shows any form of income coming from an employer. But whether you're self-employed or you're just doing that job that majority of people don't want to talk about, wink wink, that's going to be sitting at 8.37%. FHA 30-year fix will be sitting at 3. You know what? Living in a new development and trying to shoot videos, especially in this area, it sucks. So what we're gonna do is I'm gonna go ahead and finish this report inside, because the beeping is driving me absolutely crazy. It's just constant, over and over and over beeping. So let's go inside the house and we'll finish this up in a second. All right, much better. Welcome to the inside of my house. I don't really do too much of these inside the home movies, but let's get on with the rest of this mortgage rate update. So bank statement loan will be sitting at 8.37%. This does not calculate your total, like, your W-2s. We don't, order your transcripts from the IRS or none of that stuff. What we do is we pretty much do a ratio off of the total credits you have versus the liabilities and all that other stuff. FHA 30-year fix will be sitting at 3.99%. 7/6 adjustable rate mortgage will be sitting at 4.65%. Now, an adjustable rate mortgage is just that. It is a mortgage that adjusts to the current market rate. Now, a 7/6 will be interest only for 7 years. Then it gets adjusted to principal and interest every single 6 months after that. Now, that goes along those same lines as a 10/1, a 5/1, a 7/1, a 3/3, a 3/6. There's a bunch of different ones out there, but we're gonna go for this one. We're gonna do a 7/6 at 4.65. USDA, which is another one of those zero down payment programs, that's sitting at 4.03%. VA is another one of those zero down payment programs, which is for veterans. That'll be sitting at 4.01%. And hard money fix and flip, which are for people who want to go ahead and buy distressed properties and they want to go ahead and redo them, rehab them, and then go ahead and flip them for a profit. That is sitting at 9.35%, which those are usually short-term loans. Hey guys, sorry to go ahead and cut this video short, but for up to 50% commission rebate, 0% listing on selling your current home, or any mortgaging assistance, link in the description below. Could be saving you a lot of money. At least let me try to go ahead and beat your big bank. So let's go ahead and get back on with this video and hear whatever the hell it is I gotta say. Now, the CFPB, okay, the Consumer Financial Protection Bureau, who are these people? Now, every time, you ever wonder why majority of banks, lending institutions, any place that has any sort of credit, well, these people are the ones that got established back in the day because they want to go ahead and protect people like you, like the consumers, and anything that has to do with, finance. Now, they are the reason why banks are supposed to talk to you in a certain way. This is why, like, if you ever send a request at a bank, if you ever have a complaint or something when it comes to any type of bank, well, these are the people that you go to. This is where you file your complaints at. You go to the CFPB website, you go ahead and file your complaint there, because all of us, everybody, because we have to follow ECOA, we have to be equal opportunity lenders, we have to go ahead and treat everybody in an equal opportunity way. So that's what ECOA is, Equal Credit Opportunity Act. This is something that got passed, so everybody gets a chance. This is to piggyback on the video I did yesterday about Warren Buffett's company Trident. It's a mortgage company, and a bunch of different mortgage companies that got, that they get hit for redlining. Redlining is when you don't want to go ahead and provide lending services to underprivileged areas, and you want to just be that piece of shit that doesn't, that doesn't care about people, that doesn't care, because everybody's all the same. And besides, why would you not want to do any lending in specific areas, which blows my mind? At the end of the day, it's money in your pocket, so who cares if it comes from a bad area, quote unquote, okay, that's all subjective, or a good area, quote unquote, and that's subjective too. Some people might think the good area that you think that's good, it's shit, and some people might think that the bad areas that you think are bad are actually really, really nice. Now, I grew up poor. I was one of those little guys that, we used to have food stamps, but we didn't have regular food stamps, like, or the whatever food stamps that they have now. The food stamps that we had came in this little booklet with, like, the ones, the 5s and 10s, and they're all different colors. And then you got super excited when your mother or your father gave you like a 5 or something like that. You could go to the store and buy like 99% of the stuff in there. Not anymore. $5 won't get you anywhere, but those were the best. Now Hyundai, going back to this, Hyundai, they have to pay $19 million because they went ahead and they did a bunch of they falsified credit reports, right? They put delinquencies on people's credit report that shouldn't have had any delinquencies at all. Now, because of this, so what happens is basically whenever you get into a lease, a car or whatever it is, or you're financing and you're doing it, like, let's say you're doing through Hyundai Financial, or you have a Toyota, or you have a Mercedes, or whatever it is, and you finance it through them, they have to go ahead and report that debt onto your credit report, and then the on-time payments have to be reported. This is just something that we have to always do. And if, for instance, if I was servicing a loan myself and I held a portfolio on my own books, I could go ahead and report that debt onto your credit, which is a benefit to you because every time you make a payment, it actually works out. Stupid Pottery Barn. Which, Pottery Barn, man, they're slipping. They are slipping. But today, the Consumer Financial Protection Bureau penalized Hyundai Capital America for repeatedly providing inaccurate information to nationwide credit reporting companies and failing to take proper measures to address inaccurate information once it was identified between 2016 and 2020. Now, the CFPB, they went ahead and said, you know what, Hyundai, they illegally tarnished. That was the exact words, unquote, unquote, by Rohit Chopra. Said they illegally tarnished credit reports for millions of borrowers, including by falsely reporting them to credit reporting companies as being delinquent on their loans and leases when they actually weren't. Now, if you are a car manufacturing company and you are the one that's going to go ahead and, you report things to the credit, but you're dropping the ball on one of the main key components of your business, do you think that you should be allowed to, like, $19 million doesn't seem like enough, especially if you're falsifying. Like, if I falsified something on my end, I'd go to jail. Why are the repercussions for big banks and big companies like this so much less than what it is for, like, everyday people like myself and majority of you watching? But whatever. What are you going to do? The CFPB spoke. They went ahead and fined them. They went ahead and did what they had to do. But if you ever did have a complaint, go to the CFPB and go ahead and file your complaint. Now, we're going to go ahead and talk about tech market jobs, real estate jobs, things like that, because we have to look at the bigger picture of where the most layoffs are going to happen. Now, the most layoffs are going to be the people who had the influx of most hiring. Now, the influx of the most hiring is going to be, like, let's say a lot of your tech companies were hiring because during the last 2 years, it completely threw everything off. It was like this imbalance of an equilibrium, and we had no idea what was going on. So the banks had to hire like crazy, especially, like, let's say Bank of America had to hire like crazy because they were the one that was in charge of the unemployment thing. They were a little bit overwhelmed by how many people were, like, getting unemployment at that time, which pretty much was the whole entire world for a brief moment. And so the US banks, the 6 biggest US banks, they added about 60,000, so 59,757 employees from start of 2020 through the middle of 2022. Now, majority of these, a lot of these, were in the lending side of things, specifically in the home mortgaging side of this, where this beautiful man right here is part of, which is, I'm not a beautiful man anymore. I am bored and I have very, very little to do now because the mortgage rates are putting a hindering on a lot of things. So we just pretty much make phone calls on a daily basis every single day. And before, when I would call in, I'd be like, what's the rate? Now, to piggyback off of this, I'll get back into, like, you know, the jobs. Majority of us, and this is something that's actually frowned upon in the industry, but I mean, it is what it is. You have to do stuff to go ahead and keep the doors open and stay afloat. Now, what a majority of us do is we get to go ahead and buy what's called trigger leads. Trigger leads are something that where we could buy leads from TransUnion, Equifax, Experian. Now, whenever you get your credit pulled, the credit pull will always state what is it for, whether it's an auto lease, a credit card, a mortgage, or whatever it is. We know what it is. So as soon as you get that pulled, then that lead gets sent over to us. We see it. Now, it's a majority will be like, wow, that's such a piece of shit way of doing things. You're trying to always steal other people's business and this and that. Listen, it's a dog-eat-dog world. If you like it, cool. If you don't like it, you don't. And especially if I could beat the rate, at the end of the day, if I could beat the rate and save you some money, do you really care who's calling you or how you're getting it done? No. As long as it gets done appropriately, timely, and you don't lose out on the deal that you're supposed to go ahead and get. That's why I make these videos. You see the guy that's actually doing the work, and I could go ahead and put a little confidence behind what I'm doing. Or maybe I'm not putting confidence. I have no idea. So whenever we do these trigger leads, that's going to be a big thing. Now, banks, majority of big banks, they really don't do too many trigger leads. Maybe smaller banks might do trigger leads because it is kind of like a information protection type of thing where it's a little bit difficult for them to do it. But they will eventually all start doing it. Majority of mortgage companies like myself, we definitely do it. And then at like $10,000 a month, that's how much it costs to go ahead and do these trigger leads. By the way, if you want to know where we're investing our money, hell yeah, we're investing our money into that. $10,000 a month is how much it costs for us to buy trigger leads from these credit bureau agencies. Second guessing of if this is good or bad? Well, you have no choice because that's what we pay. It's my money. I could do whatever the hell I want with it. But they went ahead and dumped in 59,757 different employees. So that means that these almost 60,000 total employees that are going in, majority in the mortgaging lending side of things, well, we're not that much needed anymore. We're kind of like, you know, we're all sitting there twiddling our thumbs, and now this is going to be a big hindering on their overhead. But Amazon at the end of 2019 had 798,000 employees. By the end of 2001, they had 1.61 million total employees. Shopify started with 5,000, ended at 2021 with 10,000. Meta, whatever the hell this Meta thing is, where this virtual bullshit thing that they have going on. I hate this virtual thing that they have. Where everybody, I want to be in this other weird world, and I don't want to deal with reality world. You know how much fun it is to be in the world that we're in today? You know how much fun it is? Like, a majority of people nowadays don't realize what the people like me grew up doing. You know how hard it was for us to go ahead and go out to go get a girlfriend, to go sit there and learn how to spark up a conversation with a girl, or socialize with different people here and there from all different ethnicities and all different backgrounds. We didn't have the internet back then, not in my day. And I know I sound old as shit right now, but we really didn't. So we had to make do with what we had, and we had to go ahead and figure things out. We weren't complaining that much either. I feel like everybody's always complaining. I got little cousins and my wife's little cousins too. They're just like, they're always so angry about everything, but they don't even talk to each other. You ever go to a place and like all these little kids are just sitting there on their phone? Like, what the hell are you guys doing? You guys are just texting each other? Talk, sit there, go do something. Go get in trouble, go have fun, go make an adventure or something, except the stupid Meta shit, which is going to be a bunch of these little kids that are going to sit there with these goggles and then, I want to live in the virtual world. This world is so much more beautiful and more fun. Go enjoy yourself. But Meta, which they're a big loser, by the way, If you're in the investing world, they lost a lot. They started at the end of 2019 with 45,000 employees, ended 2021 with 72,000, and then Tesla went from 48,000 to 99.3 thousand. Now the Tesla one actually is the only one that really makes sense, especially here in the state of California, because we have a mandate to go ahead and have 100% EV vehicles being sold by 2035, and then I think it's going to weed out by 2050. So that makes a little bit sense. And then plus the only guy that I know that tripled his workload during the whole pandemic. At least I think. I have no idea what it means. But as of right now, Amazon reduced its headcount. Now they laid off 99,000 people to 1.52 employees. Now this number is probably going to get dramatically worse. I'm assuming it's going to be probably another 300,000-400,000 people that they're going to have to go out and, dwindled down. And the end of second quarter, almost doubling in size during the pandemic when it needed to beef up its warehouse capabilities. Shopify, if majority of you guys do this FBA, or you affiliate sell, or you just sell yourself, or you want to go ahead and open up a shop. I don't know if I actually put those together. I think FBA and affiliate selling are all different things, but Shopify is this store where you get to, or it's this platform where you could build like a store, like a tech store online, and they'll go ahead and they have a bunch of products you could sell and this and that. You could personalize it to yourself, or you could just make your own and then just have a Shopify thing where they have the transaction. Like they have a base platform for you to go ahead and accept payments and all that stuff. They cut about 1,000 total workers, or about 10% of its workforce. The company doubled its headcount back in 2020, 2021, like every single other person. Robinhood is another one. Robinhood, everybody was on Robinhood's nuts, which is one of the worst trading platforms that you could possibly imagine. They suck. They're terrible. It's really, really bad. But Robinhood is another one of them where they're shutting a bunch of people down. Now, to encompass everything, yes, the people that are going to get hit the hardest are going to be tech companies, which is obvious, especially since advertisers are going to start pulling back. They might start dumping back into like, your Googles, your Facebook ads, because this is how they make their revenue, by people buying ads. Now they're going to go ahead and start doing something that's called transparency adding, where it's almost like a guessing game. Like we do it ourselves. Like whenever you're buying a Facebook ad, and if you really don't know what you're doing, which majority of the time, I have no idea what I'm doing, but if you don't know what you're doing, you don't actually see where your money's going in. So you give them like $500 for that month. You want to go ahead and generate leads. You go ahead and put some keywords of what people are looking for. We don't know what the hell we're looking for. And then you go ahead and dump it into a Facebook ad and pray for the best. Well, now there's going to be something that's called transparency ad streaming. And then this way, you know exactly where your money's going to, who's looking at it, what geolocations it's going to, so it's not just going to some weird bot that's just looking at something and they're just taking your money and you don't know what the hell is happening to it. But that's going to be your mortgage rate update. So for up to 50% commission rebate, 0% listing on selling your current home, or any mortgage assistance, link in the description below. Until next video, guys, I really appreciate you watching. Peace.